Hello and welcome to The Marketplace with me, Lukman Haris, a show where we search for the hidden gems of the Bursa Malaysia, the mid and small cap companies. But from time to time on this show, we pause and take a step back to see and analyze how the markets have reacted and trying to predict what to expect moving forward. And that's what we're going to do today on this episode. And joining me to do just that is Alexander Chia, Head of Research for RHB Investment Bank, Berhad. Alex, welcome again to the show.
Thank you.
Let's start with the most important thing, the ringgit. After the rally, since the beginning of the year, it has maintained somewhat of a positive momentum. It's now October, the budget is just around the corner. What's your expectations for the ringgit?
I think the ringgit has recently experienced a little bit of a sell-off as the change in expectations for US interest rates led to some outflow and selling of the of equities on Bursa Malaysia, and plus the ringgit and the Bursa Malaysia KLCI is negatively correlated. The coefficient is roughly around minus 0.47, which means that every time the dollar strengthens, the market falls here. So essentially, we also saw a little bit of profit taking, and the change in expectations that of the increasing probability of a December rate hike by the US Fed.
Talking about the market, the Bursa Malaysia has again seen foreign fund outflows. It has seen them a few times, especially since the second half of the year, after a brilliant first half, I must say. So we've been seeing more and more of that recently. So do you think this trend will persist at least until the end of the year?
Okay, I think the recent foreign sell-off has really been a knee-jerk reaction. I personally don't think it's a structural sell-off. If you look at flows into ASEAN markets, Malaysia has still enjoyed the lion's share of inflows in 2017. Right now, after the sell-off in the last 2 weeks, which totaled about just under 1.4 billion ringgit, we are now still at a positive inflow for the year of about roughly 10 billion ringgit. So, there are reasons for foreigners to maintain, if not increase, their holdings on Bursa Malaysia. Firstly, you've got a relatively undervalued ringgit. You also have a rebound in corporate earnings this year. With RHB economists have hiked our GDP growth forecast 3 times already this year, and we are seeing improving fiscal position given the stabilization in the price of oil. So with a slightly widening current account surplus, there's no real concern to me of major sell-off in ringgit, and of course on Bursa Malaysia, unless there is a major change in the expectations for the pace of monetary policy tightening globally.
Do you foresee any major changes coming in terms of that?
Well, we think that the global tightening in monetary policy space will be very gradual. The Fed is already talking about unwinding its $4.5 trillion balance sheet. But if you look at the details, the unwinding process is going to be a very long, drawn-out and gradual process that will continue for quite a few years to come. Also, right now, although the Fed has guided for 3 rate hikes this year, we've seen 2 already. And they're also looking for 3 rate hikes next year. But that isn't really set in stone because inflation continues to come in at persistently low levels, which means that there is no real urgency for the Fed to hike faster than they really ought to. And the Fed has also taken great pains to communicate to the market at large their intentions so as not to surprise the market and shock the market as what happened in 2013 with the taper tantrum episode.
Yeah, I want to go back to what you said about the Bursa Malaysia just now. You said that this recent sell-off was a knee-jerk reaction. To what exactly?
To the change in expectations for a US rate hike in December. Given that if you look back at the Fed funds futures probability back in early September, the probability of a rate hike had actually at that time fallen to just over 20% chance. But as we pass the September Fed meeting, that probability rose to over 70%. So, which means to say that the market believes that there is a greater probability of a rate hike in December, and therefore a stronger dollar going forward. And therefore, that led to a selling on Bursa Malaysia to raise the funds and enjoy the weakening of to take advantage of the expected strengthening of the dollar.
All right, we'll come back with Alex Chia, Head of Research for RHB Investment Bank. The Marketplace will be right back. Don't go anywhere. Welcome back to the Marketplace with me, Luqman Haris. I've been speaking to Alexander Chia, Head of Research for RHB Investment Bank, Berhad. Now, Alex, before the break, we talked about the US economy mostly. And the last time you were here, if I recall correctly, we talked about the US economy and we talked a lot about geopolitical risks as well. Because at that time, the North Korea US tensions were somewhat at a peak. So we've seen that subsided over a while. So do you think that the geopolitical risk or geopolitical element has now totally been wiped out from investor sentiment?
I don't think you can completely eliminate geopolitical risks in any market around the world. But what you can't really legislate for is a global thermonuclear war, in which case we're all dead. But it's very difficult to actually price in a worst case scenario in this instance. You can never fully rule out any unexpected black swan event, given that we are already in a late stage of the current economic cycle, which is already in the 9th year.
And the recent Communist Party Congress in China has also grabbed the headlines in some countries, including here in Malaysia. So do you see any effects that this might have on economic policies of China and even towards emerging economies like us?
I think the 19th Communist Party Congress in China will really cement the emergence and position of the Chinese President Xi Jinping. And really, we believe that this will enable him to put forward his policies such as the Belt and Road Initiative, that will obviously benefit countries in Asia, including Malaysia in particular.
Let's talk oil prices. Comments on the rally of the commodities price recently?
Well, I mean, we've seen a 20+% rally in the price of Brent crude in the last couple of months, and that's really in expectations of the rebalancing of the oil market in 2018. And plus, you had the natural disasters with the hurricanes Irma and Harvey in the Gulf of Mexico that had an impact on the refinery capacity in the Gulf. So and of course, the markets have also been talking about the extension of the OPEC, non-OPEC oil cut agreement that expires next year.
Do you think an extension is enough, or is a deepening of the cut needed?
Well, that's a $64 million question. But I think an extension of the existing cuts would obviously be positive, given that the IEA is forecasting rising global demand for oil next year, and that we could see which means that the surplus of supply is gradually thinning out, and that makes the oil market very susceptible to unexpected cuts in supply for whatever reasons from any of the oil-producing countries around the world.
Budget 2018 is just around the corner. What do you think is a good oil price benchmark the government should put in forming the budget this year or next year?
Well, spot is currently trading at slightly north of $56 per barrel. The 2017 budget assumed a oil price of $45 a barrel. If you were to ask me, we would probably be looking to see an oil price assumption of maybe $51 or $52.
Very briefly, speaking about the budget, what do you expect to see announced in the budget?
Well, the theme of 2018 budget will be shaping the future. This will focus very much on the TN50 initiative to shape the future of Malaysia for the next 30 years. The focus very much will be to improve, education in technology, robotics, big data, and of course, not forgetting addressing the rising cost of living, to focus on offering goodies to the citizens to ease their burden from the high cost of living. So, which means that we should expect to see the continuation of the BRIM initiative, higher civil servants' pay, and all this means, that we could see a boost for the consumer sector in particular. And of course, rising revenues from higher GST collection and higher average oil price will also give the government greater leeway to increase the development spending.
All right.
Right.
Thank you so much, Alexander Chia, Head of Research for RHB Investment Bank Berhad. And that's it for this episode of The Marketplace. Send us all your feedback on all our social media platforms, Facebook, Twitter, and Instagram. And download our app, as you can see there, available on Google Play and also the Apple App Store. I'm Luqman Haris. Thanks for watching. Have a nice day.